What I'd say is if you can wait for 10 years, Bitcoin's going to be the best capital asset. If you've got a time horizon of less than 4 years, you ought to buy Stretch because it's digital credit and it pays 2 to 4x the cash flow of any conventional credit. And, if you want to get on the roller coaster and you want to amplify Bitcoin, then you would buy our equity, but you got to be ready for an 80 ball asset with massive drawdowns and rallies. Look, at the end of the day, Bitcoin represents the digital transformation of capital. It's wealth that you can move at the speed of light, that you can vibrate 1 million times a second, that 1 billion AIs can talk to 1 billion AIs about. And it's empowering to everyone that believes in technology as a way to live a better life.
In periods of market pullback, narratives are tested, conviction is strained, and comparisons emerge. Gold rises while Bitcoin pulls back. Commentators question whether the digital gold thesis has faltered. Skeptics resurface. Michael Saylor's response to the current drawdown is neither defensive nor reactive. It is structural. He does not frame Bitcoin as a short-term trade competing with gold's monthly momentum. He frames it as digital capital, the most performant, portable, and programmable capital asset ever engineered. Before we go on, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this. Every action helps with the YouTube algorithm and greatly supports the channel's growth. Thanks for your support and enjoy the video.
What is your general reaction to the current pullback, particularly since gold has been going up with this very same narrative that people thought would send Bitcoin higher?
Bitcoin's digital capital. So, the thing that's interesting about it is the most useful capital asset in the world. You can trade it with 50x leverage in the Far East on a Sunday morning. That's the price you pay to have the highest performing capital asset. So Bitcoin's always going to be very volatile and it's going to be high performance. And if you want to invest in it as a capital investor, you need to have a 4 to 10 year time horizon. If you don't have that 4 to 10 year time horizon, then probably you're better as a credit investor. And what you want to do is hold digital credit, like our STRC instrument.
I'm going to talk to you about the STRC in a minute. Obviously, that's come under some criticism as well. But I want to go back because you and I have had some great conversations over the years about what Bitcoin could do for the world. Not just investors, but how it could change the status of the world, particularly underprivileged folks. In fact, recently you reiterated if the rest of the world knew what I know, MicroStrategy's Michael Saylor, you're saying that your stock and Bitcoin, will go to 10 million. What is it that the world is missing? What is the message that too many people still don't understand?
You know what? The key to understand with Bitcoin is digital capital means property rights to 8 billion people from the palm of your hand. So we've never in the history of the world had the ability to give wealth in a portable asset that you could move at the speed of light on a mobile phone or computer to computer. And most of the people in the world, 6 billion of them or more, they don't have access to real estate in the United States as a store of value. So for them, Bitcoin is the closest thing to being able to move all of their assets, all of their wealth to the United States, to the most secure place in the world.
You also, in the past, said that the United States itself should secure millions of Bitcoin. We do have a crypto-friendly administration, but recently I think maybe it's the banking industry, there have been some setbacks down in Washington, D.C. What's your feelings with respect to policy and maybe some of the pressures on Bitcoin right now emanating from the fact that maybe you've hit a few speed bumps in D.C.?
Well, the nation bought Alaska, it bought Texas, it bought California, it bought the Louisiana territory. They were all very good investments. We think about Greenland right now, that's on the top of everybody's tongue. What's pretty clear is that you're going to want to be the leader in digital intelligence, that's AI, and you're going to be the leader in digital assets. If the nation doesn't buy most of the Bitcoin network, at the very least, what we want is constructive policy so that United States companies buy and United States investors buy digital assets, and that way the taxpayers and the nation benefits from their efforts.
At last read, MicroStrategies, or Strategy rather, had over 700,000 Bitcoin, 22.8% yield in fiscal year 2025. Are you still, how profitable has the overall trade been? or investment?
The company's 100 times bigger than it was 5 years ago, Charles. It's been an extraordinary achievement. The stock's up by a factor of 10. We've outperformed every Mag 7 company except for NVIDIA. So it's extremely profitable. I think the company's 3x the performance of the S&P index over that time frame. So we're very pleased with the Bitcoin strategy.
This shift to the STRC variable rate Series A perpetual stretch preferred stock, financial instrument, and essentially you say the way you frame it from a high level point of view is that for decades investors have had to choose between two imperfect options: credit, lower volatility, principal protection, but low yields, and equity, higher long-term performance, deferred capital gains, but substantial volatility and drawdowns, which of course we're in the midst of right now. How does this thread that needle?
The way to think about stretch is we take the first 11% of the Bitcoin capital gain over time. We pass that through to the stretch investor in a cash monthly payment as a return of capital dividend. So the credit investor is getting double-digit performance. They're getting deferred capital gains treatments. They're getting principal protection. We over-collateralize the instrument 4 to 5 to 1, and they're getting very low volatility. And that's a benefit to them. Their choice, if they want to be credit investor, would be to buy corporate bonds, which have a 70 basis point credit spread. In essence, corporate bonds are at a 30-year low credit spread, and junk bonds aren't that much better. So stretch gives you 2 to 3 times the cash flow of conventional credit if you're a credit investor. And if you're an equity investor, you don't have to stomach the drawdowns and the volatility of equity. You've got something which is over collateralized and principal protected.
Is there a number on Bitcoin on the downside that changes the dynamics, that you have to go back to the drawing board on this?
No, we're so over collateralized on this that we can weather bull markets, bear markets as long as we need to.
You once said that if you had a lung or a kidney, sell it, buy Bitcoin. That was about 120,000. I got one kidney left. What do I do with it?
What I'd say is if you can wait for 10 years, Bitcoin's going to be the best capital asset. If you've got a time horizon of less than 4 years, you ought to buy Stretch because it's digital credit and it pays 2 to 4x the cash flow of any conventional credit. And, if you want to get on the roller coaster and you want to amplify Bitcoin, then you would buy our equity, but you got to be ready for an 80 vol asset with massive drawdowns and rallies.
Has the embrace of Wall Street helped or hurt at this point?
I think it's a tremendous benefit to the entire crypto economy. There are billions and billions of dollars of capital that's flowing into the crypto economy, into the Bitcoin network via Wall Street investors and the vehicles they care about. Some of them have to buy public equity. Others need to buy derivatives and options, puts and calls that trade on regulated exchanges. A third class want to buy convertible bonds and they can't get exposure any other way. And now there's a fourth class of investors, these digital credit investors, and they want to buy the preferred stock that's publicly listed and liquid. And if we didn't offer them a product like STRC, they wouldn't be investing in anything related to Bitcoin.
Got about 40 seconds to go. A couple years ago, there was a headline, Bitcoin saves the world, Gresham's law. Will Bitcoin still save the world?
Look, at the end of the day, Bitcoin represents the digital transformation of capital. It's wealth that you can move at the speed of light, that you can vibrate 1 million times a second, that 1 billion AIs can talk to 1 billion AIs about. And it's empowering to everyone that believes in technology as a way to live a better life.
Michael Saylor's thesis is not contingent on quarterly performance or short-term divergences with gold. It is anchored in a long-duration view of capital evolution. Bitcoin is volatile because it is powerful. It is contested because it is transformative. It is misunderstood because it redefines property itself. In every market cycle, there comes a moment when emotion and structure diverge. Price participants argue narratives. Social media amplifies conviction. Yet the chart, unemotional and systematic, continues to reflect underlying liquidity conditions and cyclical tendencies. Benjamin Cowen's recent analysis of Bitcoin centers not on excitement or despair, but on structure, specifically the behavior of Bitcoin relative to the so-called bear market resistance band. His thesis is neither dramatic nor sensational. It is grounded in historical precedent, moving average dynamics, and the recurring rhythm of midterm years within Bitcoin's broader 4-year cycle.
Today, we're going to talk about Bitcoin, and we're going to provide an update to the bear market resistance band. I want to get into the markets because Bitcoin, has deteriorated significantly since then. Right here was when it tagged like 97, 98K. And this is where we first said, hey, look, this has transitioned into being the bear market resistance band. It's no longer the bull market support band. Because in midterm years, Bitcoin tends to find resistance at this band. And it's essentially a combination of the 20-week simple moving average and the 21-week exponential moving average. There are times where Bitcoin does get above it, but usually when you get above it and you start holding it as support later in the year, going into the pre-halving year, that's when it transitions back to being more of a support band rather than a resistance band. Now, what's interesting is in the short term, the way that this last candle body played out is still reminiscent of what we saw in 2022. So there's still some similarities. I don't expect the similarities to continue forever, but if you look at just where Bitcoin broke down back then to where it's broken down today, you can see first there was a long wick down below the prior support. You can see the same thing, right? There was support here, and then there was a long wick down. And then, if anything, this one's a little bit more bearish because we didn't even get back above. Like the weekly close, while the wick was down here, we didn't get the weekly close even back above the level like we did back over there. But some of the similarities are that after that long wick down, we then just had these 2 weeks right here where Bitcoin just kind of slowly bled out a little bit. What you'll notice, though, is the week after that, it had another spike up. That would correspond to the idea of potentially seeing Bitcoin put in some type of local top in early March. We've seen that happen many times where you get lows in February and then highs in March. If you just go simply through all the different, here it is, all the different years, you'll find that Bitcoin often finds a local top in that first week of March after a February low. Now, sometimes that February low can, it can be early in February, but then other times it'll be a little bit later in February. You can still have a rally into early March, but I just want to draw this attention to you as well, because back then you had a long wick down, a short candle body, and then another wick down. Now, if Bitcoin had another wick down, and it swept the prior wick, then it would essentially correspond to the 200-week moving average. And from there, perhaps, there is some type of counter-trend rally. But as I've said previously, trying to time and trade counter-trend rallies in the midterm year is honestly a fool's errand, because no one knows when they're going to occur. I have absolutely no idea, so please do not use my analysis to tell you when they're going to occur. I have no idea when you'll get a counter-trend rally back up. I've said explicitly many times that my objective is not to try and time counter-trend rallies in a larger contraction phase, but to just recognize that, hey, the industry is in a bear market and that there's better opportunities elsewhere. Now, there's a lot of different types of behavior you'll find online. It's like, if you're not buying it constantly and shilling it constantly, then you're against it. But that's not the way the markets work, guys. This is an asset. There's a lot of other assets. Every asset goes through bull markets and bear markets, at least if they're worth anything, right? They all go through bull markets and bear markets. And it's a normal thing. You don't have to apologize for calling it what it is. And this is a hard thing that a lot of people have a hard time dealing with, is that, they will be bullish up here. And so once it gets down here, they then start attacking, and because what else are they going to do, right? They're mad. They're taking out their frustration on other people, whereas a lot of the people are just trying to call it as they see it. I mean, it just looks like a bear market. And the easy part of this bear market was just calling the 50% drawdown. That initial 50% drawdown was easy. That's the same thing we got over here in 2019. That's the easy part. As you get deeper into the midterm year, it gets a little bit harder, as you will likely have at least one strong counter trend rally. We could have multiple counter trend rallies. Last cycle, after that big drop from the rejection at the bear market resistance band, we basically just went down for several months. Then we had a strong rally, and then ultimately it led us into the low. So for now, I think it still remains a bear market, unfortunately. At some point this year, we likely will visit the bull market support band, now coined bear market resistance band, and I would expect a rejection off of it. There's always a chance we can get some wicks above it, maybe even a weekly close above it, but ultimately, this does remain a bear market for Bitcoin. And, we can jump through hoops, we can try to pretend like it's something that it's not. And I know there's a lot of price cheerleaders that do this on Twitter, but you have to. It's worthwhile to consider the downside, because basically the people that lash out are the people that had no interest in considering the downside up here, and to consider it here also seems crazy to a lot of different people. But really, when you look at Bitcoin, and you just simply look at, say, like year-to-date returns, and you look at 2026 compared to the average of prior midterm years, we're tracking it, right? Like, it's not any different than prior midterm years. I'm not suggesting that it has to play out the same way, but I'm suggesting that what's currently happening in Bitcoin's price action is not anomalous compared to other years. In fact, if you just simply use this average to give you a forecast of what Bitcoin might do this year, it's done a pretty good job. You had an initial rally, and then you had a dump, and that's what always happens, typically, in midterm years. Sometimes we don't get that initial rally, but on average, Bitcoin is trading around these levels, by mid-February. And then eventually it gets another major window of weakness, April-May timeframe, and there still is a potential outcome where we wick lower before getting a nice little move back up. If it were to play out like this, the average, you could see it come back down, then go up, and then slowly bleed down to a new low. That's kind of what I think could happen.
Benjamin Cowen's analysis is not designed to inspire fear or suppress hope. It is designed to contextualize price action within historical and cyclical frameworks. Bitcoin's rejection at the 20-week and 21-week moving average band signals regime change. The midterm year behavior aligns with prior cycles. Counter-trend rallies remain possible, but do not invalidate the broader contraction thesis.